it really has been very difficult with these negotiations, especially when you head into a weekend where essentially you sort of have to, roll the dice, if you like, over the weekend period and just wait and see where you come back on Monday. And so managing risk in what's been very choppy markets has obviously been difficult. We have retained a very small sterling short because ultimately we still feel like the market is under-handicapping the risk of no deal or an incredibly skinny deal, which is actually not particularly economically supportive for the UK. Obviously, the news we've had with regard to the virus over the weekend is certainly not going to improve the picture for the UK. But with regards to the negotiation, it doesn't it doesn't feel like we've forward really that much at all, as you lay out there, that the positions on fishing have been rather entrenched throughout, and you read some stories suggesting that have been attempts at bridging that gap, but really we don't seem to have done so at all. So at this juncture, I struggle to see, other than the time pressure, what possibly could change those positions.
James, can I ask you about the equity market and where you sit on that opportunity or otherwise? Because inevitably there'll be those who have edged into or accumulated FTSE positions on the belief that we will get some kind of relief rally ultimately if a deal is struck here. But even if we get that deal now, given that we're tier 4 and we have the health secretary suggesting that there may not be much relief in the lockdowns until we get full vaccine rollout, maybe April, May time, do you think that permanently caps over the short term the upside for the FTSE?
It's a difficult one, isn't it? I don't think equities are used quite as tactically or expressly to sort of implement a view around Brexit. I think what you see with regard to UK equities, it fits into the broader, more global narrative of this rotation out of growth and into value, into cyclicals, buying equities and equity markets which have been more heavily affected by the coronavirus pandemic, and the UK definitely fits into that category. Also, you read multiple strategists and commentators suggesting that the equity market is very much a long-term, forward-looking market, and it's able to look through short-term disruptions. That's very much what we saw in the US equities going back to the end of Q1 and beginning of Q2 this year. It would therefore seem somewhat strange if UK equities weren't able to do that also. That being said, I do think there is some risk of disappointment within the UK equity market, because I do think we've seen flows back into UK equities in recent weeks. As I say, not specifically to do with Brexit. I'm sure that's part of it, because I do feel that the market has an overwhelmingly positive expectation towards the Brexit outcome. So I don't think anything is fully priced at this juncture. I think UK equities have got upside in a deal scenario, and absolutely they'll have downside if no deal is able to be reached.